We are at a critical junction in Palantir's journey. Everyone is on the hype train that is Palantir and AI, but that has left many of you in a completely crazy situation. Some want to build out a position, but they haven't even started, while others are halfway there but want a lot more, and yet others of you are up 300% or more and looking to lock in some profits because you're afraid it's going to come back down to earth. So let's talk about what to do in each one of those scenarios, the do's, the don'ts, kind of everything involved with each one of those. I just ask that you gently tap that like button if you like getting the truth without the hype. First, let's start with those of you that are looking to build out a position. Now, the first question I have to ask before we even move forward is, if you're looking to build out a position, have you done your due diligence? Have you figured out what the valuation is? Have you figured out exactly what your price targets are or what it wants to be? Do you know what kind of fair value, overvalued, undervalued is, or at least a range in general in regards to that? Do you understand the company, what they do, what the growth rates are? Have you listened to the past 4, 5, 6 earnings calls going back in the past there, so that way you're caught up to speed of exactly what Palantir's been doing, and each one of those times taking those quarterly financials that they release and going through them and kind of matching them up there with the earnings call and then saying, hey, did they perform to them? Did they not perform to them? How are they looking as a business? How are they executing to what they're putting out on earnings call? If you don't do those initial things in the first place, basically before you even invest in any stock, regardless of what it is, that is exactly how you end up buying high and selling low, because emotions take over. And when the stock's on a big run, you FOMO in, and because you don't understand what you own, you think it's going to the moon. And then when obviously everything corrects back down at some point in time in the future, then you end up selling low because you don't understand what you actually own. You can't see if this is an opportunity or is there a crazy problem, and everybody's saying it was just all AI hype and it's only about at $5 or $10 or whatever all the bears out there say. You start believing in that because you don't understand the company, and then all of a sudden you sell out, and of course we all know exactly what happens. It ends up coming back again, goes back up, and you're left once again possibly FOMOing back in again and kind of rinse and repeating the same exact process over and over and over again. It's all right, guys, if you don't know how to do a plan or get a valuation or create price targets, because we offer coaching and a brand new course and a whole lot more in my group, direct access to me to help you out with doing exactly that in my group, where we have a sale running right now for the March Madness sale to kind of celebrate the new coaching that's kicked off and the new course that we also have in there. So make sure you check out the pinned comment down there and see if a membership's right for you. There's so much in the group. The pinned comment down there will give you all the information. All the details are right there on the website, but do not miss out on getting that education there. It's okay. You don't want to get it from me. I understand my group's not right for everyone. Awesome. Google it, YouTube it, whatever the case is, get out there and get that information. You've got to do this piece. You've got to have it outright. You have to understand and do the due diligence in the company. And once you understand that, then, hey, I understand that maybe, the price is a little bit rich right now to you. If you kind of look at fair valuation and that's kind of where you end up, that's okay. Maybe you're just not comfortable with price targets. It doesn't make a lot of sense to you. That's okay too. A simple DCA pacifies all of that. I get it. This isn't Apple. It doesn't have 20 years worth of back data for you to go back there, and it's really, really easy to tell where fair value is. Hey, no problem at all. Just simple DCA into the stock. Basically, hey, every Tuesday, every payday, whatever, once a month, doesn't matter what you end up doing. Just set it up every Tuesday, every payday, whatever the day is, set it up, go in there, buy your shares of Palantir, and move on with life, and do that consistently, week in and week out, pay period to pay period, whatever. Anyways, you guys know, every time you get paid, do it right off the bat right there. Don't question it. Don't try to figure it out. A simple DCA beats the vast majority of strategies out there. It's not completely unbeatable, but it's really, really hard to beat a good DCA. We just had a great coaching session in our group where we talked about that, and it basically illustrated with a basket of stocks, basically, I think it was 2016 to 2023, basically illustrating how well a DCA outperformed buying the indexes, how well setting price targets, depending upon how extreme you got with the price targets there, actually outperformed a DCA as well. It was a great, great time in there. But DCA just destroyed the indexes, and obviously the traders who they usually don't even outperform the indexes there. So that's exactly what I'd do if I had no position built out at all. Do that due diligence and jump right into a simple DCA until I understood how to set price targets. Then I would move into that later on. But what if your position is halfway built out? Guys, I would pretty much approach this one exactly the same as the prior one. I would basically DCA, or I would go ahead and set my price targets and be patient with this stock. It tends to run big. It tends to come down, not crazy hard, but pretty hard. Pretty hard it comes down. And hey, I did that over the past couple of years. It would go on runs. I would just be patient. and it would come back down into range again for me to continue to buy again, especially whenever it was kind of pre-profitable there. It was a little bit more, I won't call it predictable, but it was pretty easy to delineate because the runs were so big because they were trader controlled. So it was a bit more exaggerated than what we're seeing right now in regards to Palantir. So that right there is exactly what I would do. The other piece in this category where people who already have half a position built out or so that you've got to understand is that share count matters far more than your average. I understand it is really, really hard if you got an $8 or $9 average in Palantir to average up in the stock. But just think about this. Let me give you a quick example here because I see it all the time. I see it all the time in my group. I see it in the YouTube comments. I see it everywhere. Somebody will have a $8 average, we'll say here in Palantir, but they only have 100 shares and they really wanted to have 500 shares. I know for myself personally, I would much rather have 500 shares at $20 than 100 shares at $8 because over the long run, let's say Palantir is a $50 stock, $75 stock. I know some folks have it higher than that. I can't project that far out, but whatever number you have out there in the future you think it's going to go to, you tell me, would you much rather have 500 shares at $20 average? Or would you, basically you averaged up and brought your average all the way up to $20? Or would you rather have that 100 shares at an $8 average? Sure, it sounds really cool to say you have an $8 average, but the guy with 500 shares or 1,000 shares or 2,000 shares, because they continue to DCA over the next 10 years into the stock, is going to be in a much better position if Palantir executes during that entire time frame and continues to grow revenue and continue to grow that EPS. Share count in the end in great companies like Palantir, assuming they continue to perform, is always, always more important than what your average is. Do not make the mistake of having less shares than you want in a stock because you don't want to increase your average. I have averaged up in Apple, Google, Facebook, well, I guess Meta now. All those companies, every stock I buy from here forward for infinity is probably going to be an average up. But guess what? Those shares that I've averaged up on have made me fortunes over time, over a couple decades here, because those are great stocks that have performed, and it just doesn't matter. Share count matters far more than what my average was. It doesn't matter that I blew my average up. Number three, those that have full positions but are thinking about taking profits. So the first question I have to ask you guys, and that I would ask myself if I'm looking at this, is what was my plan with the stock? If this was a plan, buy and hold, and I want to hold it for the next 10 years because I believe in Alex and their mission, and obviously if something fundamentally changes in between, obviously then that changes the dynamic. Obviously, we've talked about that in previous sell videos before. But if nothing's fundamentally changed and I'm just looking to take profits, my question to you is, what was your plan? Why are you deciding to take profits now? That doesn't make a whole lot of sense if this was a 10-year hold. Now, if there are some of you guys out there that are swing traders. Okay, that makes perfect sense. I don't swing trade often. I rarely do it. But when I do, I have a planned entry and a planned exit, and I execute whenever I get there because I don't necessarily want to hold that stock long term. That makes sense to me too. But if you're a long-term buy and hold investor and you're enjoying this run up here in Palantir and you have your full position, you are ready to locked and loaded, you're ready to ride the next 10 years, but now you're thinking about taking profits, you're falling into the trap that people fall into consistently, not everyone, but a lot of folks fall into when all the smart money or all the traders or all the hedge funds or everybody else starts telling you to take profits on things, start skimming from the top per se. And I don't know a single long-term buy and hold investor that doesn't ever regret doing that on great stocks. Remember, it was the genius move to take profits at $9. Oh man, it's up over 10 now. You got to take your profits right now. And it just kept running up to 15 and then up to 20, 25 and up to where we are now. Think about all the people who listened to that, took profits, and some people took great profits, or maybe they sold out of their complete position and they were just going to pick it up cheaper again. And then they could pick up more shares. A lot of other little games like that got played. And now they were stuck. Either they didn't buy it at all. So now they're completely out of a great stock that they wanted to own and they're kicking themselves, or they were first to buy at a much higher average. So they had a full position, they sold it. Maybe they had a $7 average or so, whatever the number was. Now they were forced to, after it ran up and it went the opposite way on, trade went the opposite way. Now they got a $15, $18, $20, $25 average, whatever the number is. Man, that's a rough spot to be in because you didn't stick to your plan in the first place. Playing those games of skimming from the top or taking profits or all those other things, those are for hedge funds. Those are for traders. That's where all that comes from. That's where that lingo comes from. That's where that mentality comes from. And I understand there's a lot of YouTubers out there who are long-term buy and hold investors saying the same exact thing. I'm telling you guys right now, it's not one of those things that happens too often with long-term buy and hold investors. Now they're right. Nobody has ever lost money taking a profit, but people have absolutely missed out on complete fortunes doing absolutely nothing by taking profits. Simply holding a stock, doing nothing else, has proven to be Probably the most effective strategy out there, period. Far more effective than taking profits on a stock. I'm telling you guys, they've done the studies. Dead people outperform profit takers, traders, hedge funds, all those other things like that. They outperform them because they can't sell because they're dead. So for me, I already have my position built out. I'm only looking for bonus shares. I'm hoping that it dips down there so that way I can buy those bonus shares. Otherwise, I'm just holding and I'm focusing my investing in other areas on other stocks that are on a steal deal right now. If you want to see exactly which stocks I think are a steal deal right now and see me buy them and see my watch list complete with those price targets, and you want to learn how to do due diligence, you want to be a part of our coaching sessions, you want to take the 5 free courses that we have in there, you want direct access to me anytime you want to be a part of the best 6, 7, and 8 figure Discord out there, make sure you check out the pinned comment for the sale before that sale goes away and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.